Hey, this is Pat Moorhead, and we are live again with our weekly 6-5 podcast. I'm joined here by my incredible co-host and bestie, Daniel Newman. This is our favorite time of the week. We can just riff on topics that we plan a little bit, but not nearly as much as we prepare for things like research papers, research projects, and even 6-5 summit videos. Anyways,
Man,
Dan, how you doing, my friend?
good to see you. Concise, brief, to the point, and a little disclosure on how we do our business. But yeah, I think what makes this show fun is the fact that we don't overly script what we have to say. You know how it can be when you're talking down a topic, and I want to have all my notes. I want to know exactly what I'm going to talk about. I'm going to run through this, and buddy, preparation from a guy that does maybe date his calendar can be a pretty important thing. But having said that, as you and I both know, some of the best conversations we ever have are the ones you don't expect.
Yeah, it's funny. I do sometimes look at my calendar like I'm looking at photos of my kids. But it is the one thing that keeps my brain, my head, strapped to my body. Otherwise,
Totally.
it would be pretty much pandemonium, right? I mean, I look at
Totally.
yesterday. I think working from 6 a.m. I think I finished my CNBC interview at 8:30 at night. So it's pretty crazy. So yeah,
Legendary, buddy. You are legendary. And I watched that interview and you crushed it. And it may or may not have served as inspiration for some talking that I did later. My first marketing professor, when I did my MBA, said the rule to success is to copy and steal everything. I don't know if that's actually true. And I think you said it in jest, but the point was there aren't that many new ideas.
no, there aren't. They're all retreaded, and the longer you go out, the more you see it. And it's funny. You even read 3,000-year-old manuscripts and stuff, even like the Bible, and it's all on repeat. And there's really only 7 themes in books and movies as well. So I'm with that. So hey,
throw them real quick. I just want it there.
Yeah. By the way, if you're new to the 6-5, I got to ask, what the heck's wrong with you? Where have you been? But we appreciate you coming here. Dan and I hit 6 topics, between 5 to 10 minutes each. We even talk a little earnings out there. And just a quick reminder, the show is not for investment purposes. It's for information, educational purposes only. And we hope you are entertained. Are you not entertained? I hope you are.
I'm entertained.
Oh, that's good. We talk a little news for context of our opinions, but as industry analysts, we get paid and assessed by our opinions. And the ones that we get right, the big ones, we do big old victory laps around the corner, and those that we get wrong, we just don't talk about. Anyways, just joking.
We're not actually ever wrong, Pat, because we never are 100%. There's always a escape valve.
Yeah. We don't control the weather. We don't control, things like what happened 3 years ago that I'm not going to use the word because we get censored.
You know the drill. Like when I said Magic Leap was going to be wildly successful, I gave 3 particular conditions that needed to take place. One, everybody needed to start using XR.
Yeah.
2, they needed to have the best management on the planet. And 3, they needed to be funded all the way through profitability and then some. So, I mean, Magic Leap should have done well. They didn't listen to me.
No, I know. And that's just sad. And I pity the companies who don't pay me to advise them in the company. But
silly people, Pat. I know. There's a dummy born every second.
Exactly. Hey, we have a good show for you. We're going to be talking Oracle, ARM. Oh, more Oracle. Actually, we are talking Oracle twice.
Yes.
Apple,
so much Oracle.
Salesforce, and Adobe. So Dan, let's dive in. Larry Ellison and Satya Nadella were on stage. Maybe for the first time, in Seattle. What on earth is going on? I mean, cats sleeping with dogs and cats. I mean, what's happening?
I don't know. Next, you're going to see Mark Benioff sit down there with them, and then the world's just come to an end.
No, that Benioff did work at Oracle for a while.
He was a protege in many ways. I mean, at this point, I think he's created his own success, but he certainly did build some of those chops under the guidance of Larry Ellison. Yeah, it was a little weird to see the two of them on that stage together. But at the same time, maybe one of the most indicative things to where the world is today. And also, let's not be inaccurate. The two have had a fairly robust partnership around cloud for some time.
Peering, like a lot of peering stuff.
Yeah, there's been a lot of peering regions for Oracle's cloud that are sitting with Azure. So there's proximity. So
yeah.
But here's what's going on is Oracle has some of the highest performance database capabilities on the planet. But as we know, in the era of AI, having the data running in a hyperscale cloud provides access to a lot of AI tools.
Yeah.
Microsoft has pretty much hitched its wagon to OpenAI, but it's betting big on Azure AI services and on the ability for companies to build AI on top of their data in Azure. Oracle has these high-performing databases that are basically used by every company on the planet, which we heard from some of these companies yesterday. And they're at this inflection between trying to do AI on-prem and trying to find this cloud euphoria, this perfect utopia for cloud and AI development. And so the two companies had something the others want. Workloads and utilization of AI services for Azure. And of course, for Oracle users, the ability to benefit from all that data and all that high performance database capabilities in using the Azure ecosystem. So I guess, Pat, when the two companies find something that the other is infinitely interested in consuming, you can find a way to put these two CEOs on stage together. But yeah, kind of like I said, they have actually been pretty cooperative. Pat, as I see this, it's a important inflection to what's going on in the market. It's an interesting moment where I'm looking at kind of what companies like SAP are going to say about something like this.
Yes.
It's definitely been the Oracle run over the last several quarters to show strength in its performance across the database platform, to continue to make cloud services a growth engine for the company, especially IaaS. You saw huge growth numbers there. But you're seeing them branch out and saying, look, we're going to build a really successful, robust cloud business. And yes, our hardware will be probably most performant, but we can still perform really well in other clouds. And by the way, in this case, you're getting both. You're getting cloud at customer on Azure, benefiting from AI tooling. And it all comes together in one place. So solid stuff, Pat. I don't have a whole lot more to say about this, but what I will say, I guess, is this the first of a few? Are we, because with all the peering, this made sense for Microsoft, but if Oracle really wants to open the gates, could you see this in Google? I mean, could it happen? I mean, I don't know. And as of now, I think this is it, but I do think with Oracle's powerful database and the fact that probably every customer of every cloud company on the planet is using Oracle, what could come next? What surprise might Larry Ellison have up his sleeve next?
Yeah, I've been in tech over half my life, and it is funny how some of the stalwarts that created this industry are still the power brokers. Isn't that crazy? And I think I even found myself maybe 10 years ago, not writing off Oracle, but if I looked at their innovation path on infrastructure, on core database, and in the cloud, they just looked like they were operating multiple clicks behind, and kind of lumped them and Microsoft into the same place. And Microsoft had their breakout moment that coincided with Satya becoming CEO. And then Oracle really had a couple breakthrough moments here. One of them was Gen 2 OCI, right? Gen 1 wasn't great. It was actually quite awful. They literally wiped the slate clean with Gen 2 and started racking up a ton of business, albeit maybe 5 years after AWS and Azure kicked into high gear. At the same time, they modernized their database, right? They modernized their database with a value prop that said, hey, you don't need 12 different types of databases. You can have one. And by the way, that one database actually auto fractalizes to multiple types of data and multiple types of it, but it's simple. And then they added the autonomous portion on top of it to remove some of the tasks that DBAs and data managers used to have to do. And by the way, also by automating it, reduced the likelihood of mistakes. And to make a long story longer, what they also did is they also remained strong in the hardware portion, right? If you look at their storage systems that for particularly for SQL are the highest performance out there, they are not using generic hardware, right? In fact, they use very high speed, not just memory where they cram it all up in there, but they also used Intel's highest performance storage. And then they wrap their software around that. And I think we've seen a lot of instances where the combination of software and hardware becomes vitally important. I mean, my gosh, look at Apple, hardware plus software. Look at AWS, and there are, I think, 5 different brands of hardware that they have, including Nitro. So Oracle is not just taking database code and running this on generic. And by the way, that's not I'm not putting Azure hardware down, but it's basic generic hardware and putting in Exadata machines, okay, and this is very unique, into the Azure data center, and then putting on top of it all the Azure PaaS and SaaS capabilities. So the big things I'm going to be thinking about is, I always talk about the 75 to 90% of enterprise data is still on-prem. What does this mean for that, right? Does this, with all this data kind of put inside of Oracle and SAP, is this going to make a dent on that 75 to 90%? I don't know. These things always take time, but an indication of their customers that they had rolled out for this 30-minute video were telling, right? Fidelity, right? Voya. Those are 2, obviously, fintech. And then you had PepsiCo, right? A major manufacturer on there. But anyways, exciting stuff. I think you broke down kind of the win-win situation here. By the way, if you're AWS and you have a hate-hate relationship between, Oracle and AWS, they're the last place I would ever expect this to happen.
Well, did you notice I mentioned Google? I didn't even mention
yeah, there's a potential, right? You have TK, and I think we would be ignorant to think that personalities don't matter in this business, and it's all analytical, right? TK used to work for Larry Ellison, right? And my guess is that they still have conversations. Heck, our friend at Salesforce, Mark Benioff, used to work for him as well. So personalities matter. The next place I would expect this to go would likely be Google. The last place I would expect this to go would be AWS. AWS doesn't, they didn't accept DGX Cloud, right, which was NVIDIA architected hardware in there. But here we are with Azure. So great stuff. Looking forward to learning more next week at Oracle Cloud World. Dan, you and I are going to be there with bells.
Rock and roll.
Hey, let's go. Let's get into the literally the world's the largest public offering in X years. I don't know how many years, but it's been a lot. You and I were on TV multiple times. I think I did CNBC twice. I think you did as well. I did a little segment for Yahoo Finance. By the way, Josh Lipton has departed Apple and is at Yahoo Finance. He was kind of second sharing with John Fort at CNBC. But listen, I'm sure you've read all the news because it's the top news story. But let me break it down for you. It was supposed to, this offering was supposed to come out at 51, and they completely frickin' blew it away, up 24.5% in day one. It was up after hours last night. I think the seminal question is, hey, can they keep this going? Right? I mean, I'm not an equity analyst. I'm an industry analyst, but I do have to weigh in on that. I think the long-term prognosis for ARM is really high, right? Dominant smartphone CPU, dominant consumer electronics CPU, growing in the data center and carrier. They have scale. I mean, 250 billion chips, and scale matters for a couple of reasons, primarily the software base. So it took them 10 years, almost 12, to build this data center stack. And, for those watching at home, I think it does take about a decade to do this. Growth opportunities are pretty huge. They might have around 20% of the data center market, but that's really concentrated in networking, storage, networking and storage and security. They have about a 5% share in data center core CPU, and the other 95% is AMD and Intel. I do believe that both Microsoft and Google have some custom chips that are coming out very similar to AWS. Automotive market is huge, right? Going from 1,000 pieces of silicon to 3,000. There's so many. They cover CPU, they cover GPU, they cover sensors. Many people don't know this, but ARM actually have automotive sensors, visual sensors for autonomous driving and safety systems. PCs, Apple, 100% ARM. It's an architecture license, which isn't a lot of money per unit, but they did certainly stir the pot. You've got Qualcomm coming in with Orion, which, by the way, is also a custom piece of silicon. But what about everybody else? I do believe that if Qualcomm is successful in this market, it's going to drag along Samsung, MediaTek, probably a couple other OEMs, maybe even NVIDIA. I wouldn't be surprised if NVIDIA does this. So, and the threats, China threats, no different than any other big chip tech company. They might be even a little bit more insulated, even though the percentage is high in China at 25%. They're not doing things that get on the radar of the U.S. government, like discrete GPUs. Risk 5, potentially a potentially a bigger threat once we see more designs from big cores from a company like Ventana Micro. But right now, Risk 5 is limited to the embedded side, and I would say it's going to take probably another 5 years to build out a full enterprise stack. That's what I got. Congratulations to Renee Haas and the team. Your work has just begun.
Yeah, so this is an exciting moment. The market is dying for something to be exuberant about. And so this is exuberance at its best. 25 times revenue for a company that actually shrunk last year. I would do that with my company all day long. Call me. We can make this happen. But it's kind of like a tale of two cities here. There's a real story of what's going on at ARM, and there's some real positive in there. And then there's this kind of AI story that everybody desperately wants to connect. Yeah. And the real connectivity of the AI story is probably more of a evolving than a revolutionary moment, meaning you kind of hit on server, you hit on maybe automotive, you hit on content related to AI. But right now, most of ARM's money is made on selling IP to handset makers that go into into smartphones. That's where most of it. And then there's IoT.
Yeah, it's 45% of their business, down from 65% when SoftBank bought them.
And it's an improvement. And it's been improved by the increase in the networking, an increase in server, some automotive content, the PC business. But also, let's remember, PC business sucks. Mobile business sucks. Now, having said that, it's kind of nice because we are probably in the later cycle of what will become an upturn in the near future. I do think AI is going to drive a revolution of PCs and formats. We've certainly seen what ARM has accomplished with Apple in the M series. We were both somewhat skeptical that ARM and Apple would get it right. And not only did they get it right, but I think that they've done a really tremendous job of working together to build a platform that people love. And so credit where credit is due. The inclusion of ARM cores inside of, advanced compute, accelerated computing, like the Grace Hopper, is very indicative of the fact that in the most critical AI applications, ARM has designs that can be utilized to move the AI business forward. So these are all things that deserve credit. I think where I probably have the most skepticism is their valuation right? Meaning that this company at $2.5 billion a year of revenue, selling mostly licensing, not so much of this higher margin systems, data center and server yet, really worth like half of what Intel's worth at $2.5 billion revenue versus like 20 times that. Okay. And so that's more my question mark. I think over the course of the next 5 years, I actually really believe they will grow into this valuation. The problem is as an industry analyst, I say, good company, buy, good company. I don't actually make buy recommendations, but good company doing important things. As an investor, I'm kind of looking at this going, wow, they have a really long way to go to fit any sort of price earnings valuation. Because remember, they don't make very much money if they make money. They're still like right at that kind of newly making money size of company. Their earnings, they've improved every year, but they're still not highly profitable either. So it's kind of a fundamentals versus vision. On the vision side, I really like the company. Fundamentally, it has some work to go, but this was a great moment. Renee Haas deserves all the credit because you know what the one thing that the market is the truth, meaning what people spend and what people pay is exactly what the company's worth in a public market. So while I can complain about valuation right now, if I want to buy it, I'm buying it at 70 billion val, and good for Renee, good for the company, good for all the shareholders.
Good analysis, Dan.
Thanks.
But we're not done with you yet, because we're going into a slightly related topic to ARM, and that was Apple's September 2023 event. I think I saw you on CNBC chatting it up while you were in San Francisco, giving your expert commentary on Apple.
Commentary. Pat loves that. Pat loves that.
Hey, you've been an Apple user since it started, so
I still use Apple every once in a while when I have to, when there's nothing else available. My kids won't respond to my text if I use a Samsung.
I know, it's sad.
It is sad.
That's why I carry two phones.
Now, here's the story. This was another kind of sleepy, iterative set of announcements that came from Apple. And I think the problem is pretty much since iPhone 4, everything's been pretty iterative, Now, there's some things that get people out of their chair. The last announcement, it was the Vision Pro. This is the future of XR, and that's cool. At this one, it was the idea that I could tap my fingers and answer a phone call. Now, if you look at that from a visionary standpoint, the idea that gesturing and connected and devices and wired and wearables are going to start to interact in your world, you could start to see how this in your Vision Pro start to, live in a matter of convergence, ubiquity that could be very, very exciting. From a standpoint of 1 gram lighter, from a standpoint of maybe 1 more hour of battery life, from a standpoint of a notch versus an island, I still think, we're still talking small improvements on a period over period that oftentimes don't even match to what Android is doing right now, running on the premium tier Snapdragon platform. Which one am I talking about? Well, everybody was juicing about a 5x optical zoom. Pretty sure that's about half as good as you can get on a premium Samsung device right now. But are you going to run to the store and pay $1,300 for that? Well, of course you are. So as I kind of will comment on how I finished the ARM story, if you can get people to do it, that's great. So we have this kind of conflicting existence, Pat, where as analysts, it's our job to kind of critique, criticize, advise, provide our comments. And like having technology that's half as good as the competitor should typically not rate super well, nor should it create enthusiasm and excitement. But having said that, when you're Apple, that's all you need to do. So then the real question, I'll pass this back to you, Pat, because, I don't, even the watch stuff, all that stuff pretty much bores me, but you're a watch guy, so you can maybe talk more about that. Yeah. I've got a watch too. I like mine better. But here's the real thing. Are people going to jump out of their chairs to buy? And so my take on that is Apple always has people, no matter what it puts out, that are absolutely willing to get to the front of the line to buy anything. And that, by the way, is the absolute personification of a great brand. It's not because it's the best technology, though. So that's where we're fighting our own demons when we try to talk about this stuff. I also do believe that this pricing, the increased pricing yet again, for what is very small and marginal improvements generation to generation, has to be at some point in an economy that's still on stilts. We still have super high interest rates. That means people putting on these credit cards are going to get whacked. We still have inflation through the yin yang, and people's credit and savings are depleting. So is it the moment for Apple to raise prices, and will people run to the front of the line? Here's my analysis. Yes. No matter what happens, they will go further into debt to have the newest device. Good for you, Apple.
So being old has a few benefits, not a lot, but one of them is perspective. And Apple reminds me in 2023, like IBM was in the 1990s, the early 90s, which was they didn't have the best technology. They were milking the fruits of the labor and the bets they made in the 1960s with the mainframe. And, as we saw with Toshiba, like we saw with Sony, like we saw with RCA, and I think we've seen with a lot of companies, ultimately there is an end to dominance based on lock-ins and prior innovations. And the reason, in my opinion, and by the way, Apple used to invite me to their events for 5 or 6 years. They don't anymore. I don't think they appreciated my truth bombs, which I just never got my invites back there. But I do have a sense of clarity not going to their events. I do use their products, but because it's a lock-in, my family will not respond to anything but iMessage. And Apple got a lock-in in Western Europe and North America. Outside of those regions, people use more apps like WhatsApp. In China, they use messaging apps. So that lock-in, there's 2 sets of lock-ins that happen. And this has been Apple's success. The first lock-in was music, right? I got to give Apple credit, when they broke apart the bundles and the CDs and went with Apple Music. That was a key driver. So people were very concerned of, hey, wait a second. If I move off Apple, how do I get, or my iPod at the time, how do I get access to my music? And at that point, it wasn't portable, right? You couldn't take that music over to Android. And then came iMessage. Apple does a lot of things right, but aside from semiconductors right now, it's really not that big of an innovator, in my opinion. They're locked in. They're working furiously to figure out that next best thing. And these small little incremental improvements, I'll be honest, I couldn't tell the difference between iPhone 14 and iPhone 15. Huge yawner to me. And even when they lean in on this 5X camera, they still fail. Like Samsung's had this 10X for years. One thing I do find very interesting in the silicon, again, I give them credit for that, is 35 TOPS of AI performance just on the NPU. That is staggering, okay? So you have to wonder, there's actually no software or services that actually take advantage of that, but I think Intel is at least setting the stage right now where they can layer in generative AI capabilities and just blow people away. So
it's the what is it, Paz? The 8K TV of phones. There's
Yeah,
no content for it, but they've got it.
yeah, I mean, they came out with what they called a spatial camera, which is really just to capture capture content for, their $3,000 developer headset, the Vision Pro. So, anyways, I do think based on their lock-in of the App Store, based on their lock-in of iMessage and the legacy lock-in of music, and not taking too many risks out there, I think they're going to sell a ton. My final comment: I don't know if you've seen all the hate coming down on Apple CEO Tim Cook on the video they did about the environment. It's pretty funny. You should check it out. Here's what gets me going. I do applaud Apple in making our phones greener, but give me an effing break, okay? Make your handsets last 10 years. That is how we are going to save the environment. I do give Apple credit on how many years they extend their software, but there was a class action lawsuit where Apple actually copped to we add capabilities that slow down your phone. How environmentally conscious is that? Okay. And, if they truly cared as much as I think they're trying to pretend that they do, I think that they would have a lot more downcycling programs to send phones to emerging regions. But that's pretty weak. Samsung actually has some pretty good downcycling emerging regions types of stuff. So with that, congratulations everybody at Apple for a big announcement. Let's move to Oracle. Dan, is it apparent that I have fun with this?
It is. I think we're both having some fun today. Although I will say we're going to have to do probably half as much content for the last three topics. And I think we can do that. Apologize, everybody. I have to do some other work today, as much as I love this. I know.
All right.
This is all I want to do.
Well, let's go.
Hey, let me start. I want to take a long time to tell everybody I'm going to go faster. Now, it's like I'm going to work out later. I promise. Yeah. Oracle earnings.
Oracle earnings. Am I talking about this or are you talking about this?
This one's, it's you.
How about that?
But go faster then. I've been listening to you talk for like an hour. I forgot I was even here.
So Oracle had a good quarter, and it was an iffy guide according to the street, and they had the largest decline in years on their stock. But I got to tell you, we don't live and die as industry analysts on the stock price and investors' reactions. In fact, I typically will make fun of Wall Street and how it reacts. I mean, it had monster growth for Cloud IaaS. By the way, the company that 3 years ago everybody was saying didn't have a clue about cloud. Fusion and NetSuite ERP keep trucking right at 20-ish% growth, which, by the way, is pretty freaking impressive with all the single-digit SaaS growth, enterprise SaaS growth, 10% SaaS growth, right? Still trucking along, and I think that just shows the hey, I think NetSuite is actually it might have 2 new customers this quarter as well. I can't believe I didn't come up on the call. I can't believe Dan, you might have not come up on the call. Like, no respect. It's just such a disappointment. They rolled out AI companies. The cool part is not only did they roll out brownfield AI customers, they brought out freaking born in the cloud AI folks, Cohere, 12 Labs, John Snow Labs, Luma AI. And that to me demonstrates that they have something special from a value proposition. I kind of ignored and yawned at the deal they did with NVIDIA, but I believe that is now paying dividends. And then if you look at the re-architected OCI, you put those two together at reasonable prices, where their pricing strategy is to price the less differentiated stuff at lower. I think we got a winning combination here.
Yeah, so it's a requirement to do an announcement with Jensen. I think the 6.5 did one first, by the
We
way.
did.
We were there, and now others are following us. It's not atypical, Pat. We are
Right.
sort of the trendsetters. Oracle had a solid quarter. I mean, look, they missed revenue by it's almost weird when a company that's like 77% predictable revenue couldn't find the 20 million it needed. I know this sounds kind of crazy, but to come in at 12.47 versus 12.45, that was legitimately billion. You're talking about 20 million across $12.5 billion. It's almost crazy how that can go wrong, especially when you run the ERP systems and you have all the billing systems and your tools and tech. But having said that, crazy run up of value this year. I mean, the stock just absolutely ripped and roared. The company's been on fire in its cloud infrastructure business. The NetSuite and apps and part of their company has been regularly incredibly performant. And so I have no beefs with this. I think there's a couple of things. We are in this continuous period of sell the news. It's been running up. Company created much stronger earnings than a year ago. Revenue growth at close to double digits. And remember, this is a company that has a disruptive business segment in cloud, but it has a massive established customer base in its database business. And that's going to be a huge percentage of its business for a long time. And that growth is more stable than it is, accelerated. So, Pat, I know because we got to move quick, you really hit all the high points. The sell-off was sell the news. It was sell the news. It wasn't a bad quarter. It wasn't a bad guide. And their cloud business, where their growth is coming, is doing fine.
Good stuff, Dan. Let's go to Adobe, and maybe you can take this one. Not only do they have earnings, they went GA on some of their generative AI goodies.
Yeah, well, I'll definitely start off with the earnings here. This is another company that's seen a very strong run-up over the past several months with some huge estimates and price targets on the company. It's been one of the biggest beneficiaries in the market on generative AI and AI. And the company has done some things really well. I think as it's pertained to responsible AI under its leadership, it's shown real promise there in terms of showing potential generative AI capabilities outside of text. It's one of the companies that's most adequately demonstrating what's going to be possible. This is a company that really kind of breaks into experience, media, and it's got documents. And all three businesses were performing, but it was another company that kind of saw around double digits, 9%. And its performance was steady state and stable, Pat. I think part of what's happening now is we've had all this kind of exciting period where tech was been in growth. And now what we're starting to see is the AI super high, meaning this kind of euphoria that we've seen around AI is starting to normalize as people are starting to want to understand better companies' ability to execute revenue against their AI promises. The good news for an Adobe is I do believe the company has the products, has the services, not just in documents and in images, but also in its CDP and CRM side and its Experience Cloud. When it comes to retail, when it comes to digital journey, this is one of the most sophisticated companies on the planet with some of the most robust capabilities. And that's why pretty much every major company on the planet that's built digital commerce experiences builds on Adobe. With that in mind, the one other thing that's kind of lingering out there, Pat, is you realize it was like a year ago today, the Figma announcement was made. So it's been a year.
Very quiet, hasn't it?
The deal has not been done. There are a number of probes. I stand by my assessment that this deal should get done. It is not the biggest issue. It certainly hasn't come up as Adobe's not a gatekeeper, according to the DMA. The ability to build a collaborative application for creativity doesn't seem to me like something that we necessarily need regulated. And so I really do hope that finds legs. I think it was a great deal for private markets, great valuation. And in this era, we need a healthy public-private relationship where the companies can, feel that if they build a successful business, they can exit to a public company and actually close the business. So I'll pause there because I talked a lot about the earnings. There's some generative announcements. Do you want to chime in on the earnings at all? Or do you want to jump in and take the
I want to
generative
hear a little bit
stuff?
of the earnings. No, I mean, listen, in this, world of pretty much all over the place in pandemonium, they had a beat on the top and a beat on the bottom, which I think is really freaking impressive. Single digits on creative ARR isn't great, particularly with all of these new features, but it literally just went GA for them to capture revenue. The document ARR of 17% is a lot more impressive. And think of signatures. Think of I pay for PDF licensing, right, to go in and edit and create those. That's it. That's all I got, buddy.
That's all you got? Well, you know what? Let's basically just make sure we're clear to everybody out there that's asking. The commercial releases to a number of the Firefly web applications and some of their Gen Studio went GA this week. So I think, Pat, the next 2 to 3 quarters, we need to watch for adoption. We need to understand who's paying. We need to understand what kind of incremental revenue this creates. And by the way, this sounds like Dan, the broken record, because I've been saying this now for 2 or 3 quarters. The world wants to not just hear about what your AI does, but they want to understand why people are going to spend more money because you have AI capabilities. Adobe has the potential to show that. And by the way, so does the company we're going to talk about next.
Yeah, there's 2 ways companies are looking at generative AI, right? There's the offense play, which is, hey, we're going to go in, significantly increase capability, take market share, charge more, reduce costs. And the other is defensive. And I think you can look at Adobe in 2 ways, right? There were these crazy startups. Dan, you love to send those out on Twitter. Here are the 2,700 different tools you can use for AI. Mid-Journey is a great example, and that could have disrupted Adobe. But to Adobe's credit, if I look at the feature list of what they came out with Firefly, it's very basic, and I think that's perfectly fine. And it will go up. But the fact is, it's GA. They can make revenue on it. They've tested it with enough customers. Their beta program was off the frickin' rails, right? Everybody wanted to use this thing. So I like what I see, if nothing else, from a defensive perspective, in that they're a lot less likely to get disrupted by an upstart on this. The feature set isn't incredibly long. So, for instance, there are some tools that my daughters use in their marketing departments that will take a podcast like ours, pick the sound bites that are important, and auto-magically create a video. Stuff like that is not available, but hopefully we'll get it. Good stuff. Adobe, not being disrupted. Now it's time to show that you can disrupt and take share, drive revenue, increase ASP and take rate as we move forward. So that's all I got. Hey, Dan, we're going to get you out of here, buddy. You're not very motivated to get me out of here when I got to get out of here, but I'm motivated to get you out of here when you got to
Hey, I only sent you one dirty private message. It wasn't even that mean. See, the difference is I was just public about my time urgency. I get everybody out there, you got to understand Pat and his calendar. I've gotten some very interesting messages when I throw Pat off his calendar.
Yeah.
And it's the reason I think we'd be more successful as married couple than business couple. But let's just say I always am motivated to make you happy, buddy.
Man, you're so nice. You're my best friend. I appreciate that.
Here to help.
Okay, but let's crank this out. Let's get you out. Let's get you to your big appointment. Salesforce, Dreamforce 2023, San Francisco. There is so much to talk about, but as you would expect, the highlight of this was all about generative AI. It was about the data, the AI technologies, the CRM applications that go into it, and with a focus on trust. Super interesting. Salesforce is trying to own the trusted peg, and it's going to be interesting versus their biggest competitors. Can they own it? On one side, I felt like they were talking to their customer base, Dan, as opposed to trying to get more business. They didn't really tell as aggressive or compelling story on moving business to Salesforce as I thought motivating their current customer base to use more or more modules. I want to stick to my guns here on they do tell a very good trust story. And they were the first company that I had encountered that got into the mechanics of how they ground data, how they essentially discard any of that grounded data out there to make you feel good. But Dan, I can't get off of this. 75 to 90% of data is still on-prem. And how does Salesforce move that? I know there's MuleSoft, I know there's linkages, but the companies that they rolled out are not the companies as partners on the data side that actually have this data. They rolled out Snowflake, they rolled out Databricks. Those companies don't have the 75 to 90% of that data. It's easy, it's low-hanging fruit, but I just, this is part of my research that I'm going to get underneath. But by the way, the examples that they showed across the entire Einstein platform, that, by the way, you have a co-pilot for each one of these: sales, service, marketing, commerce, analytics, and platform, is very compelling, albeit, in my opinion, focused on current customers and motivate them to do something. To go for the big nut, they're going to have to answer the question, and they're going to have to motivate people to act dramatically different. Dan, we're 14 years into the public cloud, and here we are. 75% of data is still on-prem. That is the big win. The other question I'm trying to get underneath is, and Salesforce showed us this in their vision video, is how you pull ERP data and legal data and IP data into this. Where's that data going to be coming from, right? So it kind of their vision reinforces kind of my question. But all in all, it was just an amazing event. It was my first on-prem in-person Dreamforce, and I will have my write-up soon.
Same here. Yeah, I'll be definitely publishing something near future. It was the world's largest AI event. And depending on how you classify it, that might be right. CES might be bigger, but is that an AI event? Okay.
Yeah.
So in good news, San Francisco held up pretty clean. I had the chance to meet some luminaries at a Time 100 luncheon. So that was pretty exciting. By the way, I didn't make the list, so wasn't that exciting.
Darn it.
I know. I'm happy for you, buddy. I'm happy for you. All right.
You're in the top 100. You're in the top 10 Air Insights AI people.
That's right.
Thing. You and Bob and Maribel.
Einstein has made has come back, and it's finally ready. You know what they say sometimes? I'm early, but I'm not wrong. Well, the first iteration of Einstein was early, and you could argue maybe it wasn't right yet. But the Einstein platform now is truly enabling the data cloud and the opportunity for generative tools. Is this the end all be all? No, of course it's not. But the integrations are there. The company is building with its own data services. It's got, Tableau. It's got integrations to get Google Workspace. It's got M365. But Pat, maybe the biggest thing for me, since I've got to kind of be concise here, was I think Slack is a powerhouse, and it's underestimated how big of a capability Slack has to actually take Salesforce into a more competitive future. Why do I say that? Because the way we're going to interact with our data in the future is going to be more generative. It's going to be more natural language. It's going to be more conversational. And right now, Salesforce, that's not how you interact with it. But in the future, could you be in Slack, and could you be talking to it or chatting to it like we do to a chatbot, or like we do to find out the data, the reports, and the things that we need to know? You bring up a great point about the connectors, MuleSoft, creating a sort of harmonized data platform that enables companies to benefit from all of their data. I think, interestingly, as large language models progress, foundational models get smaller, and you can then actually tap data in a more fluid network with less latency. The possibility of being able to get enough data into the public cloud to then talk to your data that's sitting on-prem is plausible. It will be work to be done. But again, you don't need all the data. We know this. You need some of the data, and more importantly, you need the right data. And so connecting the front end, Salesforce has got it nailed. Connecting the back end, there is some work to do to get access to all the data. But of course, you're not doing everything in Salesforce. This is customer service, marketing, And in sort of business intelligence right now, you can still do a lot of things over in your ERP, and then you can funnel certain things through connectors over to your front end. Pat, it was a good show. Look, this is probably an hour-long pod by itself, and I wish we had more time and I wasn't rushed, but I am, and therefore all of you are SOL. But you know what is great is if you loved what you heard today, Pat,
you can connect to us, subscribe, and we appreciate you coming on and keeping within Dan's calendar, because Dan really is a hawk.
You're the best.
On that calendar.
You're the best.
Yeah, we appreciate you. Take care. Love y'all.